What's up, everyone, and welcome back to the channel. We've got a packed show for you today, covering some of the biggest stories shaking up the tech and finance worlds. First up, OpenAI just hit the pause button on a major new feature for ChatGPT. Then, we'll dive into why Elon Musk is once again going to bat for the H1B visa program. And finally, you want to miss this. Bank of America is now suggesting a place for Bitcoin in investment portfolios. Let's get right into it. So, let's start with OpenAI. It seems they've decided to delay the launch of their new ad program for ChatGPT. Now, this is interesting because just a few weeks ago, the company was reportedly in talks with major advertisers, exploring how they could integrate sponsored content right into the chatbot's responses. The idea was that when you asked ChatGPT for, say, a product recommendation, it might suggest a brand that had paid for that placement. This was seen as a major step for OpenAI to diversify its revenue streams beyond its subscription models like ChatGPT Plus. The official reason for the delay hasn't been explicitly stated, but sources close to the company are pointing to a few key factors. The primary concern seems to be user experience. OpenAI is incredibly protective of the clean, uncluttered interface that has made ChatGPT so popular. They are worried that introducing ads too hastily could alienate users and make the tool feel less like a helpful assistant and more like another commercial platform. Let's be honest, nobody wants their AI-powered brainstorming session interrupted by a pop-up ad for car insurance. There's also the technical challenge. Integrating ads seamlessly and relevantly without compromising the quality and neutrality of the AI's responses is a huge hurdle. How do you ensure that a sponsored recommendation is still the best one for the user? How do you clearly label sponsored content so that users aren't misled? These are complex ethical and technical questions that OpenAI is likely grappling with right now. They can't afford to get this wrong. A poorly implemented ad system could seriously damage the trust they've built with millions of users. It looks like they're choosing to play the long game, prioritizing user trust over short-term revenue. It's a smart move, but it also highlights the immense pressure these AI companies are under to find sustainable business models. Moving on to our second story, let's talk about Elon Musk. He's back in the headlines, this time for his staunch defense of the H1B visa program. For those who might not know, the H1B visa is a non-immigrant visa that allows U.S. employers to temporarily employ foreign workers in specialty occupations. It's a cornerstone of the tech industry, enabling companies like Tesla, SpaceX, and X to recruit top engineering and tech talent from around the globe. Recently, there's been renewed political debate around immigration and visa programs, with some critics arguing that the H1B program takes jobs away from American workers. Musk, an immigrant himself from South Africa, strongly disagrees. In a series of posts on X, he argued that the U.S. needs to make it easier, not harder, for skilled individuals to come and contribute to the American economy. He emphasized that these talented individuals are crucial for driving innovation and maintaining America's competitive edge in technology. He pointed out that many of the world's brightest minds want to come to the U.S., but the current immigration system is often slow, bureaucratic, and discouraging. He even went as far as to say that making it difficult for talented graduates from American universities to stay and work in the country is insane. From his perspective, it's a matter of simple logic. If you have the best talent in the world, you want them on your team, not competing against you. Companies like Tesla and SpaceX are working on incredibly complex challenges, from electric vehicles to interplanetary travel. To solve these problems, they need to hire the absolute best people, regardless of where they were born. Musk's argument is that a restrictive visa policy is essentially a self-inflicted wound for the American economy. He believes that attracting and retaining top global talent creates jobs, rather than taking them away, because these individuals help build successful companies that then need to hire even more people, including American workers, across all departments. This stance isn't new for him, but his recent vocal defense adds a powerful voice to an ongoing and very important conversation about the role of immigration in national prosperity and technological leadership. It's a debate that directly impacts the future of Silicon Valley and the entire U.S. tech landscape. And for our final story today, we're shifting gears to the world of finance, and this one is a real game changer. Bank of America, one of the largest and most traditional financial institutions in the world, has released a report suggesting that an allocation to Bitcoin could be beneficial for certain investment portfolios. This is a massive development. For years, major banks have been either skeptical or outright dismissive of cryptocurrencies, often labeling them as speculative, volatile, and risky. Now, in a recent research note, Bank of America analysts have acknowledged Bitcoin's unique properties. They highlighted its potential as a portfolio diversifier because its price movements don't always correlate with traditional assets like stocks and bonds. In simple terms, when the stock market goes down, Bitcoin doesn't necessarily follow suit, which can help cushion a portfolio against losses. The report specifically mentioned that a small allocation, around 4% of a portfolio, could improve its overall risk-adjusted returns. They're not saying you should go all in on Bitcoin, but they are saying it deserves a seat at the table. This recommendation is significant for a couple of reasons. First, it represents a major shift in institutional sentiment. When a powerhouse like Bank of America starts taking Bitcoin seriously, other banks, wealth managers, and institutional investors pay close attention. It provides a level of validation and legitimacy that crypto has been seeking for over a decade. This could open the floodgates for more mainstream investment capital to flow into the digital asset space. Second, it reflects the growing demand from clients. Banks are service businesses, and their wealthy clients are increasingly asking about crypto. They can't just ignore it anymore. The recent approval of spot Bitcoin ETFs has made it much easier and safer for both retail and institutional investors to get exposure to Bitcoin through their regular brokerage accounts. Bank of America is essentially responding to this new reality. Their report is a clear signal that Bitcoin is no longer a fringe asset for tech enthusiasts. It's becoming a recognized component of a modern, diversified investment strategy. This could be a pivotal moment for the long-term adoption of Bitcoin and digital assets in general. So, to recap today's top stories, OpenAI is taking a cautious approach to monetization by delaying its ChatGPT ad program, prioritizing user trust and experience. Elon Musk is making a strong case for the H1B visa, arguing that attracting global talent is essential for American innovation. And Bank of America has given a significant nod to Bitcoin, recommending it as a portfolio diversifier and further cementing its place in the mainstream financial world. These are fascinating times, with technology and finance intersecting in ways that are reshaping our future. What do you think about these developments? Are you glad OpenAI is holding off on ads? Do you agree with Elon Musk's stance on immigration? And are you considering adding Bitcoin to your portfolio? Let me know your thoughts down in the comments. I read every single one. Thanks for tuning in today. If you found this video informative and want to stay updated on the latest trends in tech and finance, make sure to hit that like button and subscribe to the channel. It really helps us out. We'll see you in the next one.